Right, welcome to part 3 of Lecture 3, FMGT3224. We have just examined how we would go about accounting for over or under applied manufacturing overhead. Two different methods at play here. And the method being used in the example is this one here, parent company's method, the simplest method, where it's all dumped into cost of goods sold. And so from an accounting journal entry T account perspective, what that looks like is whatever the balance in cost of goods sold is, you take this overhead account where you had actual of 650, allocated or applied 680, and so you're going to debit this for 30,000, credit cost of goods sold to get the final balance in cost of goods sold, so that this account ends up being in balance again. Again, not focusing too much on the journal entries in this course, but don't forget them completely. They'll help you sort of understand the overall cost flow. Okay, so what then are the implications of having over or under allocated or applied manufacturing overhead? Well, let's think about this. If overhead is under applied, what does that mean? That means that we didn't apply enough. So in reality, it cost us $100 for overhead, and we only applied 80. So we're $20 under applied, which means our products are have a cost that is too small and needs to be increased. So we would then need to increase the cost of goods sold. And if we're going to increase cost of goods sold on our financial statements, then obviously our net income is going to decrease. And so conversely, if we over allocate or over apply the overhead, the opposite is going to happen. Cost of goods sold will need to be decreased, which will increase the net income on our income statement. So let's take a look at this now at in problem brief exercise 4-7 on page 139. All right, so Osborne Manufacturing uses predetermined overhead rate of $28.20 per hour. So 28.20 per direct labor hour. This is based on estimated labor and estimated manufacturing overhead. That's nice. Company incurred total actual manufacturing overhead cost of $315. So actual overhead cost of $315,000. So what was allocated? Well, let's see. They used 11,500 direct labor hours. And so the amount allocated is going to be 324,300, I think. Should have written this over here. Anyway, so the actual amount, 315, subtract to get the difference, and you end up with 9,300. And so is this over or under applied? Well, let's see. We applied 324, should have applied 315, so it is over applied, right? Okay, so if we've over applied $9,300 worth of overhead, what's the question asked us to do now? Assuming the entire amount of the underapplied or overapplied overhead is closed out to cost of goods sold, what would be the effect of the underapplied or overapplied overhead on the company's gross margin for the period? Okay, so we've overapplied. We've basically put too much cost into our cost of goods sold. So cost of goods sold is now overstated and must decrease, right? So if cost of goods sold goes down, then gross margin goes up. And that question 1 there. And that essentially answers the question. Okay, so gross margin will go up when we reduce our cost of goods sold by dealing with this overapplied inventory, or overhead rather. All right, that concludes this demo problem. Okay, um, now one scenario that we're not going to spend a lot of time on, but is something worth bearing in mind, is it is not essential that one company have a single plant-wide overhead rate. You can have multiple rates. They can be, and often are, different rates for each department, for example. So as kind of shown there. And this will make sense when you've got some departments that are heavily labor driven, in which case you probably have direct labor hours as an overhead allocation base, and then other departments that are very highly automated, maybe it'll be machine hours as the driver for the allocation base for overhead there. So um, at the end of the day, it works more or less the same way that we've talked about so far. So we're not going to go through a whole bunch more calculation on this, but just understand that in larger organizations you can have multiple overheads, typically departmental overhead rates that will be different rates, and they will be often using different allocation bases as well. Okay, so that concludes this lecture. You've got homework associated with the labs that are attached to this lecture. So your quizzes will be based on the following homeworks or exercises, and obviously this is subject to change. So make sure that you're always referring to the master schedule for the complete, current, accurate, and up-to-date list of problems. But that concludes lecture 3.